Welcome back, everyone. If you've spent any time on the internet lately, you've undoubtedly noticed the alarming news stories. They claim your social security card is getting a massive overhaul, that your old paper copy is totally useless, and that you must take immediate action or risk losing everything. You are going to see these rumors everywhere if you haven't already. Today, I am going to cut through the noise and show you what is actually fact, what is pure fiction, and most crucially, the real adjustments coming to your Social Security payouts between right now and 2027. Because while the hysteria surrounding the physical card is completely overblown, there are legitimate shifts on the horizon that will alter your monthly deposits, and most folks are completely in the dark about them. Some of it will put more money in your pocket. Some of it comes with a frustrating catch, but you need to grasp all of it before the final numbers are set in stone this October. Before we dive into those details, make sure you hit that subscribe button and turn on notifications. Social Security guidelines are constantly shifting, and when major updates happen, just like the ones we are unpacking today, the government does not call your house to explain it. They simply update the rulebook and keep moving. My job on this channel is to monitor every single change and break it down for you clearly, well before it impacts your wallet. Those who are subscribed stay ahead of the game. Those who aren't usually find out the hard way. So hit subscribe and let's get started. Let's kick things off with the physical card itself, since that is the main thing sparking panic. Here is the absolute truth. Your standard paper Social Security card is not being phased out. The government hasn't declared it void. There is absolutely no strict deadline where failing to act means your benefits vanish. Anyone pushing that narrative is either deeply misinformed or just trying to bait you into clicking a link. Your paper card is perfectly valid. What is genuinely taking place is that the administration is introducing a digital version of your Social Security number through the My Social Security Hub at ssa.gov. This basically means if you hold a web-based account, you have the option to pull up your number on a smartphone or a laptop, rather than digging through your files for the physical paper. For almost all daily needs, simply having the 9 digits memorized does the trick anyway. The actual paper slip has always mattered far less than the digits printed on it. This new digital access is just an extra convenience, not a mandatory swap. Here's why this matters, even if it isn't the emergency people claim. Right now, there are nearly 50 different versions of the card floating around. Some of the older ones printed before 1983 lack basic security measures entirely. No holograms, no special ink. They are extremely easy to duplicate and exploit. Going digital simply offers a safer method to pull up and prove your number. It is an upgrade, not a ban on the old system. But here's the piece of news that you actually do need to take action on. If you haven't taken the time to register for your own My Social Security profile at ssa.gov, you must prioritize that today. Not because your current card is going bad, but due to a massive wave of identity theft that has spiked across 2025 and 2026. Fraudsters are actively setting up online portals using the names of citizens who haven't bothered to create one yet. Once a criminal registers an account under your identity using personal details leaked from various data breaches, they instantly gain access to your entire benefit history. They can swap out your direct deposit bank details and funnel your monthly money straight into their own accounts. The defense against this is incredibly straightforward. If you claim your account first, it blocks anyone else from attempting to open one under your name. Just head over to ssa.gov, select the My Social Security option, and set it up. The process takes maybe 15 minutes and it costs nothing. Now, let's shift gears and talk about the actual dollars and cents, because the changes happening with your benefit payments between now and 2027 are huge, and we just received fresh updates this month. As a recipient, you likely know all about the COLA, or cost of living adjustment. That is the automatic bump the administration adds to your checks every January to keep pace with the prior year's inflation. Back in 2026, we saw a 2.8% COLA, boosting the typical retirement payout by roughly $56 a month. Analysts dubbed that increase a Trump bump, as tariff-driven inflation nudged the adjustment higher than initial projections. But something huge happened just this month, strictly within the last couple of weeks. The projections for the upcoming 2027 COLA were adjusted drastically higher. On May 12, 2026, the Senior Citizens League, which is an independent watchdog group focused on retirement policy, bumped up their 2027 COLA estimate from 2.8% all the way to 3.9%. That is a gigantic leap for a single month, and it is highly unusual. Their announcement pointed directly to the April 2026 inflation numbers, revealing that consumer prices jumped 3.8% year over year, up from 3.3% in March. The main culprit behind this spike is energy costs. The ongoing conflict in Iran has severely choked the global oil supply, moving through the Strait of Hormuz. Fuel prices have surged, and that is pushing inflation higher across the board. What does a 3.9% hike actually mean for your wallet? Well, the standard monthly retirement check as of April 2026 sits at $2,081. Factoring in a 3.9% bump brings that figure to around $2,162. That is an extra $81 every single month. When you stretch that across a full year, you are looking at nearly $1,000 extra dollars compared to what you get now. And some financial experts are projecting an even steeper climb. Independent policy analyst Mary Johnson recently adjusted her 2027 prediction to 4.2%, meaning an average check could swell by closer to $87 a month. If the official government announcement in October lands anywhere near these estimates, 2027 will deliver the fourth largest cost of living bump we have seen in 36 years. But here's the critical detail that flashy news articles conveniently ignore, and it's the factor that dictates how much of that extra cash you will actually get to see in your January 2027 check. Every single time your Social Security goes up, the cost of Medicare Part B goes up right alongside it. Medicare Part B covers your outpatient medical care, and that monthly premium gets automatically deducted from your Social Security funds before you ever see it. To give you some context, when your benefits climbed by $56 in 2026, the Medicare Part B premium jumped by $17.90, moving from $185 to $202.90 a month. That automatic deduction wiped out nearly a third of the average person's raise before it even arrived. The 2025 Medicare Trustees Report has already warned us that Part B costs are highly likely to climb yet again in 2027. We won't know the exact dollar amount until November, but looking at historical patterns and our current high inflation reality, the hike will be significant. A 3.9% COLA raise could easily be partially offset by a $15 to $25 monthly increase in your Part B premium. It doesn't eliminate your raise completely, but it definitely shrinks it, and most folks are totally unaware this offset is coming until their January check is smaller than they expected. There is another element to this situation that could radically alter the financial math for a lot of you, and it has flown completely under the radar. Last July, Congress enacted a law called the One Big Beautiful Bill Act, which introduced a brand new federal tax deduction tailored specifically for seniors age 65 and up. Beginning with the 2025 tax year, qualifying individuals can deduct an extra $6,000 if single, or a massive $12,000 if married filing jointly. This is completely separate from, and on top of, your standard deduction. To qualify, your modified adjusted gross income needs to fall below $75,000 for singles, or under $150,000 for married couples. Why does this tie into Social Security? Because depending on your overall income, up to 85% of your Social Security payouts can actually be taxed. That rule has been in place since the baseline numbers were established way back in 1984, numbers that were never adjusted for inflation, which means they now impact the vast majority of retirees. This new $6,000 deduction drops your taxable income significantly, meaning some recipients won't owe a single penny in federal taxes on their benefits anymore. Now, here is where the timing gets incredibly critical. The cutoff to file your 2025 taxes was April 15th, which was just last month. Most of you have already submitted your paperwork. If you weren't aware of this brand new deduction at the time, you almost certainly left cash on the table. Fortunately, you can fix this mistake. The IRS permits you to submit an amended tax return using Form 104-0-X to claw back any deductions you overlooked. Major tax preparation platforms, like TurboTax, have explicitly confirmed this scenario, noting that filing without claiming the $6,000 senior deduction is a perfectly valid reason to amend. It can take up to 16 weeks to process, but that refund cash goes right back into your account. Pull out your 2025 return, check for Schedule 1A and the Senior Enhanced Deduction, and if it's missing, get that amendment filed. This is your hard-earned money, and you can absolutely get it back. Finally, I want to touch on a quick but vital point that affects every single person watching, whether you are currently collecting checks or still years away from retirement. Every single adjustment we've discussed, the COLA bumps, the tax changes, and the extra money you'll see in 2027, is calculated as a straight percentage of your base monthly benefit. That baseline figure hinges entirely on your lifetime earnings record. If there are mistakes in that history, say an old employer reported incorrect payroll data, listed a lower salary than you actually earned, or logged a zero for a year you were working hard, your baseline benefit is permanently dragged down. Consequently, every future percentage bump is figured on a smaller starting number. Just one inaccurate year on your record can easily shrink your monthly check by around $100. The way to catch and fix this is to log into ssa.gov and open your official Social Security statement. Cross-reference the earnings listed for each year with your own personal records, and submit a correction immediately if you spot a mistake. So, let's look at the full picture. The alarmism over your paper card is totally overblown. It isn't being canceled. However, setting up your My Social Security account is genuinely urgent to protect yourself from identity theft rings. The 2027 COLA prediction just skyrocketed to 3.9% this month, making it the fourth biggest bump in 36 years, though Medicare Part B will take a portion of it in January, exactly like it did in 2026. The new $6,000 tax deduction for seniors was likely left off the return you filed last month, but you can still claim that money by filing an amended return with Form 1040-X. And lastly, make sure to audit your lifetime earnings record, because any errors there will shrink every future raise you ever receive. Subscribe, pass this video along to anyone you know who relies on Social Security, and I will catch you in the next one.